It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, is the professor, the doctor, the mayor of Beckerville, Mr. Michael Becker. Michael, who owns over 5,600 apartment units in 27 buildings, $125 million raised. Unbelievable.
Yeah, it's been a good run, no question.
It's, as you say, it's the golden age of apartments. Is it still the golden age?
It still seems to be, right? Everything, the financing out there is pretty readily available. We still seem to have a pretty good economy. So life's been good the last several years doing what we do.
So Michael Becker, who joins us on the Ask Mike Mondays, is the former banker of a large national bank that did $1 billion in commercial real estate loans for them, transitioned over to being a loaner of money to an owner of money. So he has done a great job of putting his portfolio together. So Michael Becker, thank you for joining us. What's going on in the Old Capital world these days?
Yeah, again, we have the Old Capital Conference coming up. I know you just got a bunch of people sign up when you guys were out at San Jose at your last investor meeting out in San Jose. But on September 13th, we're going to have the upcoming second annual Old Capital Conference at the AT&T Stadium. You can guys buy tickets at the oldcapitalpodcast.com website. You can certainly sign up for that there. One of the things that we hadn't really talked about, I know recently, James Ng, who works for Old Capital, works with Old Capital, just did a webinar. Maybe we can kind of talk about that. I think it's also at oldcapitalpodcast.com. So I'd encourage people to go there. What would they find if they went to there, Paul?
So if you were thinking about buying an apartment transaction, the lending is probably 80% of the transaction. So 80% of the money is coming in from the lender, 20% is coming in from you. And so it's better to have an understanding of what the rules are when you are borrowing money. So James Zhang, who's a loan officer, spent 10 years at GE Capital as an underwriter before he came to Old Capital about 3 years ago. Goes into great detail in a webinar. There's actually two. There's a 101 that kind of explains the basics. And then there's a 201 that kind of goes into the next level about understanding Fannie Mae, Freddie Mac, what some of the bells and whistles are of those programs. It's something that you want to listen to. So they're probably about 45 minutes to an hour long, both of them. Go on to the Old Capital podcast and watch the webinar. So great stuff on that.
Yeah, definitely encourage everyone to come out again to the conference. We're going to have, nearly 700 people there. It'll be great networking. We've got a ton of people from all over the country. Have a bunch of people specifically from the Silicon Valley area, because Paul's been doing the, you did that twice now, going up to Northern California and having basically like a group with our buddy JC up there. Yeah,
JC, who is a hardware engineer, owns a bunch of multifamily in the Dallas-Fort Worth area. He's owned it for almost since 2008, so about 10 years. He's gone through a cycle, kind of seeing what the ups and downs have been. His investors just love him. He is a great person with some great critical information about owning multifamily. So everybody usually comes down from San Jose to Texas. Now it's an opportunity for some of these folks that live and work in Texas that own real estate to come up to San Jose. So we just had on June 21st, a couple of weeks ago, we had another Apartment Investor Network meeting. So look for your invitation if you want to come to the next Apartment Investor Network, which I think is going to be towards the end of August. So look for an invitation to go to that and join some fellow Silicon Valley folks that have an interest in getting into multifamily property. So today on Ask Mike Mondays, Mike, on the first thing when people look for a transaction, they want to do some analysis. What is the first thing that you do when you look at a property? What is kind of the back of a napkin approach?
Yeah, really when we're looking at deals, we typically, the two most critical pieces of information that we get are going to be a rent roll, a current rent roll, and then the most recent T12, so the last trailing 12 months worth of financial statements broken out monthly. That's basically what a T12 is. And so what we want to do is kind of go through and take a look at the trends of the property. Is my income increasing or declining? Kind of break out what the historical expenses are by major category, and kind of evaluate the deal, how it currently is operating, the trends of it. And we'll look at the rent roll to kind of see, obviously upcoming expirations and things like that, and kind of what the in-place scheduled rents are. And really kind of through that, we can kind of see and analyze kind of what the most recent leases were signed at and kind of compare it to what leases, 12 months ago were signed at. So we kind of have a sense of, like I said, going in the right direction or not. And then we, go through and we start making adjustments when we start putting our pro forma together. So we kind of compare historical historical numbers. And we use typically the online databases that we have access to, like CoStar, and we use a service called ALN, Apartment Listing Network. And that's kind of, they do a bunch of rental surveys. And so we go out and kind of virtually shop these deals and do some comps and then try to, compare to what we think we can, come in this asset and spend some money improving it. And, we should be able to come in and raise the rents. That's kind of the goal. And hopefully through that, we see some upside in the deal. Then on the expense side, we'll go through and kind of benchmark a lot of our historical norms that we use to operate our properties and see if there's some expense savings along the way, or if the expenses have to go up because they're not putting enough money in the deal. And we certainly need to look at what, the taxes are going to be and maybe potentially adjust the taxes up. And we'll put together a basic pro forma, and we're hoping to find, properties that are, 10 to 20% or so below market rents, kind of what the in-place numbers are relative to comparable properties in and around the subject property. And if all that makes sense and will, look good, then we'll take it to the next level and, really see if we have a decent amount of pop that we think we can gain. That's when we start really digging in and doing property tours and some real, more extensive analysis. But basically what we're trying to find out is how the property currently is operating. And if we think that we have, 10% or more or so in upside in the rental rates, that's usually a pretty good start. So long as you don't have to overpay for the property so much and have such a low walking in cap rate, that's usually kind of the good start to a potential opportunity.
Now, talking a little bit more about, when you have an interest in buying a property, the broker who has the listing in the property is typically going to send you, again, the T12, the trailing 12, or maybe a year to date, whatever that comes out to be, or a year end, whatever that looks like. So you may not have the most recent few months because maybe they started to have a conversation with the seller back 4 or 5 months ago. So you may only have, if today is August, you only have financials up until maybe April or so. Make sure you ask the listing agent to get the most current financials because your trend is your friend. And if we think they're going up, still going up from March, April, May, and then all of a sudden you're looking at August or September to start to do the numbers, there may have been a fall off during the summer. So just don't forget to ask for the most up-to-date numbers. The other part is a question, just kind of folds into it, is what's the rent roll used for? Why do I want to look at the rent roll? Why is that so important?
Yeah, we're really just kind of, one, you need to understand kind of the occupancy of the deal and then kind of, any sort of concentration of lease expiration. So do we have all the leases? We have a large percent of them expiring in 1 month all at the same time. Or are they more normalized and kind of smoothed out expirations throughout the year? But really, we're looking to kind of see what the in-place scheduled rents are on the rent roll. And we kind of, the average in-place effective rents on the rent roll. And then we take the effective rents and we kind of compare that to what we believe the market rents of the property are. And again, that's really kind of the upside in the deal. Are the effective rents pretty much already at the market rents, or is there a gap in there? And then that's maybe an opportunity where we can come in and spend some money on the property potentially and push the rents up from the current effective rents to market. And that's really kind of how you create essentially the majority of the value of the deals that we do in the multifamily space.
There are all different types of rent rolls, ones that are high tech where the software helps you disclose what all the information in the rent roll. And then there's low tech where maybe it's an Excel report that somebody has personally just written on and it's broken down by month on the rent roll that they paid this month and they check the box. So it goes from a large gamut. But things that we're looking for, kind of doing a little undercover work when it comes to the rent roll, we're looking for, just like what Mike says, month to month. Do they have a bunch of people that signed a year lease, but they haven't been renewed for another year, and they're just sitting there month to month? The other thing is, do they have 6-month leases or 12-month leases or 18-month leases or 24-month leases? Sometimes I don't know if these longer leases are even legal in the residential side, but that kind of can tell you whether you have to worry about that you cannot raise rents immediately if they're locked into these long-term leases. Other thing too is that it may say in that rent roll that you have Allura, that your rents are low for the property is an affordable property. So it may say in there that where market rents may be X, but the highest you can raise them because there's a land use restriction agreement for affordability. You can only have it at $850 versus the market being at $1,200. So you can pull that up. Other things you can find out is when are tenants thinking about vacating the property. So it may show in the rent roll notice to vacate. If you have 100 people in that property and you see 10 notice the vacates and maybe it's all around one building, what's going on there? Was there a water leak? Was there a problem on the property that you got to uncover? So again, being a sleuth, you got to ask those questions about why are they noticing to vacate for the following month. Another thing also too is it realistic in the rent, when you take a look at the rent roll, is your market rent, are they overly inflated? Where the market is maybe $1,000, but someone's put on there, the seller said it's $1,250 or $1,300. Now that's way over the mark. So it gives the idea that everybody can get the $1,300, but the market really truly is maybe $150 less than that. So you have to be careful about being honest, and having the seller be honest on the rent roll. Is that really what the market rents are on the property? Other things we look for is similar names on the property. Is there one family that's named Jones? Is there 4, 5, 6 Joneses? Are they all related? Because sometimes these properties become communities and they invite their friends and families over. Sometimes you don't know, but if you start to see a similar name pattern on that property, what happens if you upset one family? Does that mean that the rest of the family is going to vacate the property? So these are just some questions that I look for, and just to see some patterns on the rent roll. So the rent roll is extremely important, and make sure that you review that with your lender too. Michael, anything else?
No, I think that's a bunch of information we see with everyone, but this is kind of really looking at the T12, the rent roll. We're looking at these deals. Most people want to see something where they have some level of upside in them. So seeing the in-place rents that are maybe a little bit lower than the market rents, and a clear path to come in and increase it. There's a lot of nuances to this whole business, but that's certainly a good start. So long as you don't have to pay such a low cap rate to relative to what a fully stabilized property would be. If you could buy it for similar cap rate to what a fully stabilized property would be, then you got the starts of a good deal in the making.
So if somebody wanted to get more information about what SPI does and what you, Michael Becker, do, would you be open for a phone call?
Yeah, the easiest way, if someone wants to find out more information about us and potentially working with us, the easiest way is just go to our company's website, which is www.spiadvisory.com. That's SPI, like spy, advisory.com. There's a contact us page. Fill that out, and we're always happy to have a 10 or 15-minute telephone call with listeners of the podcast.
Sounds great. That was Michael Becker, The Smartest Kind of Room. I'm Paul Peebles. Have a great day.